This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Investors still mulling over the higher for longer U.S. interest rate world. Meantime, the FTC not mulling over, but rather pulling the trigger and suing Amazon in a long-anticipated antitrust case, accusing the e-commerce giant of monopolizing online marketplace services. Startup investor Steve Case, co-founder of AOL, of course, weighs in and explains why targeting some of big tech makes sense.
Also ahead, our cover story on another tech giant, Alphabet, and why law enforcement requests for Google user data is raising some serious privacy concerns. Plus, we talk with one of the producers of the newly released feature film, Dumb Money, which portrays some of our most talked about financial titans and the Main Street investors who took them for a multi-billion-dollar ride.
Unbelievable. All of that to come. We begin with the big picture, money markets and the macro environment, and how we assess the worries of investors and traders, especially when it comes to sticky inflation and a Federal Reserve that is hell-bent on getting inflation back to its 2% target. These worries continue to play out in a trade where stocks move lower and U.S. Treasury yields higher. With us is someone who thinks about it all and connects the dots.
Peter Atwater, he's adjunct professor of economics at William & Mary, who before that worked in financial services and with hedge funds. You might recall that he coined, Carol, the term K-shaped recovery.
Yeah, he did indeed. He was recently on to talk about his new book, The Confidence Map, which came out in July. So delighted to have you back. How are you?
I'm doing great. Glad to be here.
Well, it's great to have you here. How are you thinking about kind of the things that are coming at investors right now and just the world at large?
Well, there's a lot coming at investors, but what's been so striking to me about the past couple of weeks is the absence of emotion. We've watched the sell-off in bonds. We've watched the sell-off in stocks. We've watched oil prices rise. And there's this remarkable at ease that investors seem to have, even though markets have gotten oversold or, in the case of oil, overbought. And it's really inconsistent to me with what prices would suggest. So I'm perplexed that people are taking all of this as calmly as they are, particularly because it wasn't, 6 months ago, interest rates were at this level and people were panicking about the banks, and it's a big yawn today.
So what do you attribute that to?
I'm a little worried about real complacent behavior on the part of investors, because there's no sense of that things could get worse, whether in terms of the economy itself or higher interest rates or inflation. There's almost this sense of, okay, this is what it is. Until the economy gives us signals that it's weakening, or until the consumer rolls over, we're going to count on some sort of miraculous landing of this.
One thing that Carol and I talked about this week was the depletion that we're seeing when it comes to the cash savings of Americans.
Right, household balance sheets.
Household balance sheets. I mean, pretty much everyone except the top 20% has run out of that excess cash savings that they had during the pandemic and post-pandemic.
I worry about those at the low end where the cash ran out a long time ago. I think it's interesting that folks are only taking note of it now, but for those at the bottom, this is a phenomenon that's now more than a year old. And so you're starting to see that roll into delinquency rates, particularly in automobile loans and credit card loans. And the automobile loan one worries me because, particularly for low-income individuals, the car is the job.
Yeah.
And they don't have the flexibility of work from home that many above do.
Are you comfortable with some of the data points that are out there, including the labor statistics here in the United States?
I'm comfortable with the statistics, but what is clear, even with these statistics, is that jobs are not equating to confidence, and that you've seen no material improvement in mood, even though jobs have come back and people are working more. And so I think we we do ourselves a disservice to think that having a job is going to boost confidence.
I think it's funny because I think Tim and I talk a lot about like the things that we're paying for in life right now, whether it's homes or rates on buying a home, right?
Insurance is super expensive now.
School, like everything seems super expensive right now.
Yeah, and
we have jobs, and we feel pretty confident about it.
These are the things that are at the low end of the hierarchy of need. So we're not talking about luxury goods where you can do with or without. We're talking about essentials, and so that creates this sense of vulnerability where people feel hostage to either the price scarcity or the supply scarcity or the demand scarcity.
Everything you're talking about, we could have talked about 6 months ago. We could have talked about in January before the run-up of close to 20% on the S&P 500 this year, which, by the way, has now been pretty much cut in half at this point. So, Peter, what were people ignoring, and what does it portend for the future?
So if I look at the markets over the last 6 months, I think the indices are masking what's really going on, which is this enormous stratification where the low end, Russell small cap stocks are, barely, I don't know this afternoon if they're up for the year.
You talk about this all the time, Carol.
We talk about the small caps underperformance in a big
and
way.
this is an indication of declining confidence and declining success for small businesses. And so I worry that investors, by pouring money into the thoroughbreds, into the Amazon and Apple and Google and Microsoft, are being misled by the fact that things are troublesome below the surface. The other, 495 companies.
The other thing I guess I would go to is that when we talk about rates and we constantly keep going, highest rate since 2007 or the 2008 time, and that time really felt like the bottom was going to come out from under us. It doesn't necessarily feel like that time today that bad. But then again, is it because we're not necessarily really reading what's going on? Are we missing things?
Yeah, and I think we're still in this unwind from negative interest rates 2 years ago. And so we tend to look at it on an absolute basis, but it's going to be interesting to see how balanced investors feel when they get their statements at the end of the quarter, where both their stock portfolios
you're
and
done
bond
now.
portfolios.
I was going to say, a lot of people don't wait to get the statements. They, log in when they see red.
I check periodically. But you're right. It's like a reality check of it's again a reminder not everything goes up.
Yeah.
But when we do go, is there something though significant when we do make those references back to 2007, 2008, which was such a significant time in this country, as well as certainly within the financial market universe? Are we setting up for another period that's as rough as some of the stuff we went through there in terms of the markets?
So I think what's been so interesting in the past 2 years is we're seeing a concurrent unwinding of extreme sentiment in both stocks and bonds. The trade isn't risk on versus risk off.
Yeah.
It's risk on versus risk out. And you're seeing that in the growth in money market funds where money is leaving the market outright. And that's a trend we need to keep a lot of attention on, because 07, 08, other than a few weeks, there was this rotation into bonds out of stocks. And that we're not seeing that, even though yields are significantly higher than they were recently.
So where's the money going?
It's going into money market funds.
Over 5% in a money market fund.
Yeah.
You just set it in there until rates keep going
earning
higher.
More than 10-year yields today.
Yeah.
I mean, so cash has become a viable alternative. And as I said, with stocks and bonds moving down in price together, that it could start to feed upon itself.
Will it stay that way? Who knows?
Who knows?
Who knows?
But at a certain point, bonds are going to become attractive to some of these people, right?
So that's the question. If bonds were a bubble, if negative interest rates were a sign of extreme sentiment, then we're likely to see that rising rates, falling prices don't draw a crowd. That we've seen everybody who was going to buy a bond did. And much as you see when stock market bubbles unwind, lower price doesn't draw anybody. You get the occasional bounces, but it's a perpetual unwinding machine.
Is it safe to say, and I think you mentioned this earlier, we've never come out of a pandemic. We've never come out of a time period like this. We don't really ultimately know how it all settles.
We don't. But let me create a bull case here. You talk out of both sides of my mouth like an economist.
That's fine.
We've talked about all this cash going into, or all the money going into money markets. That then becomes a potential source for further enthusiasm if sentiment were to bottom.
The cash on the sidelines
The cash
grows.
on the sideline, and there's a lot of it. I mean, there's an enormous amount of cash sitting there, and so you could have this powerful reversal where the crowd says, that was it, that was as bad as it got, and we're back to the races.
I mean, if you're saying that like the S&P 500 at 4,500, you were regretting not putting some money in, now it's at 4,200, and you're like, okay, maybe it's time, or there could be further to go.
Well, and I can create a bull scenario, which is if the dollar is then going to fall,
right,
you start to see a declining dollar. That's a huge tailwind for these mega caps.
With us is Bloomberg News congressional reporter Eric Wasson on the phone at the Capitol in Washington, D.C. Still with us, Peter Atwater, adjunct professor of economics at William & Mary and author of The Confidence Map. And Eric, I want to start with you. Give us some color about what are you hearing? What's the environment in and around the Capitol as we count down to that possible shutdown?
Well, I think really the focus is on the House, where even longtime Republican aides and operatives are saying it's just chaos. They haven't seen anything like it. It's just an inability, really, of the House Republicans to come together on even an offer. They proposed a stopgap spending bill of between 31 days or 45 days, try to attach that to some border security provisions and make the president come to terms on a border deal. But they can't even really get the votes to pass that. So they're not even off of first base here. And meanwhile, the Senate's moving forward with this bipartisan deal. It's about $6 billion in Ukraine aid, $6 billion for disaster, funds the government for 47 days. Now, if the Senate passes that, which it likely could do by Sunday, government shutdown will already started, but there'll be a lot of pressure on McCarthy to bring that up. But he told his conference he's not going to bring that up today. And so we're really heading to a shutdown.
Eric, you've seen this play out before. So just give us an idea of if the government does shut down, or maybe we say at this point when the government does shut down. Help us by looking into your crystal ball and giving us an idea of when things open up again.
Well, one intriguing possibility is that House moderates conduct a rebellion. We've had a couple of stories on the Bloomberg about that. They have some procedural mechanisms. One's called the discharge petition, where they could, within about 9 legislative days, force a vote against the Speaker's wishes on that Senate bill or on their own rival plan, which would actually extend government funding to January 11th. To be viewed as a betrayal of the party, but they're arguing, a lot of the conservatives have voted against the majority speaker candidate and voted against House rules and other things, so they've also shown disloyalty. So, Mike Lawler of New York, one of the moderate Biden district Republicans, is leading that effort. He can probably bring along 5 other New York Republicans to help him, and that's all it's really needed to trigger this process. So it could be as little as 9 days. There are ways the Speaker could try to thwart that. On the other hand, we could see a resolution quicker. It just really depends on these moderates and whether the Speaker ultimately decides, just the shutdown's just not worth the pain, not worth risking the House. He could face a motion to oust him. At that point, it'll be up to Democrats whether they bail him out. There's probably enough conservatives that he would, be able to be ousted without Democratic help.
The political process. As we said earlier when we began talking with Peter Atwater at the top of the broadcast, Peter, one of the things that's on the minds of investors is this potential for a government shutdown. There is potentially an impact when you don't have government programs, the expenditures going out, you don't have employees being paid. There's an impact. I mean, how do you think about it? I think about William & Mary. They spend a lot of time in terms of policy and the connection of policy and economic impacts.
Yeah, so I often say that policymakers follow mood. And this is policymakers in me here now mode. The only thing they care about is their individual survival. And with mood falling, as indicated by the markets, that's going to make getting a resolution together very difficult until there is ultimately capitulation, where some group is led to believe that they're vulnerable in this process. And what we see today is a lot of between the gerrymandering and the heavy one-statedness that we have in terms of political alignment, that vulnerability is not showing up anywhere anytime soon.
So, Peter, your book is called The Confidence Map, Charting a Path from Chaos to Clarity. Chaos is a word I think a lot of people would associate with what's going on, at least in Washington right now. Eric, you might agree or disagree, I don't know. Do Americans still look for confidence in the government, or have we kind of said, you know what, it's not happening?
The bond market would say they don't. I mean, the markets yawn over what's happening in Washington is remarkable to me. But that is the nature of the investing crowd today.
But is it yawning because they know it's going to get resolved, and it's happened before?
Yeah. I think we're numb to it. But therein lies the danger. Yeah. That belief that ultimately Congress comes to its senses is based on the past, and the environment, the mood environment, at least right now, suggests that may not be the best assumption.
Eric, come on back in here, because it was interesting what Peter said. Like, I do think that there is such a big yawn. I think if I brought this up with a lot of my family members, they'd be like, yeah, okay, tell me something I care about. But I do wonder, Eric, in terms of, do members of Congress, are they getting calls from their constituents? I mean, I'm sure corporate folks might be, if they're not going to get some kind of, government contract payout or something. But I just wonder, do lawmakers hear from the voting members of the U.S.?
Well, some of them say that they aren't hearing, some of them say they are. But I would say we have a couple of really good things on the terminal right now. One is a great story which talks about which lawmakers have the most federal workers in their district. And one of them is Matt Gaetz, who's leading the government shutdown charge. He has the third most number of federal workers in his district. So, these are people who are not necessarily acting in the interest of their constituents. I'd also point out another story I wrote on the terminal, which is about the economic impact. We discovered on BGov, Bloomberg government data, that $1.9 billion per day in lost or delayed revenue to federal contractors. And that just is going to grow. You're going to see service contractors laid off and never get back pay. You're going to see production lines disrupted. And who we talked to in that story, basically, they said, this is the time with high inflation, high interest rates. You're going to see a cash flow crunch for some of these small contractors. You're going to see some companies even go belly up in a 6 to 7 week shutdown. So, I think the longer it goes on, the longer the clamor, the bigger the pain, as your guest said, and someone's going to have to capitulate.
Eric, that is such a really good point. I mean, Peter, I do think about that. Smaller companies, man, they live, I feel like, from money in to money out. Like, they just live from day to day in terms of their, financial books, if you will. I mean, that is a possible cost to all of this.
And I think it's yet another moment where those on the left and the right fail to appreciate the vulnerability of those at the bottom in business and individually, and ultimately the potential that those at the bottom say enough of both left and right.
What happens when, or if that happens, Peter?
So I think you start to see grassroots movements where you see pockets of both red and blue individuals and businesses at the low end say, we've had enough.
I feel like you need to Occupy Wall Street or Occupy corporate America, 2.0.
But I mean, maybe that was the Tea Party, or maybe it was the rise of Trump in 2016.
But I think that, and Eric may want to weigh in on this, is that the environment today is uniting.
Well, uniting everybody.
Those with similar vulnerabilities.
Well, Eric, we've got only about 25 seconds. What do you say to that about unifying people?
Well, I think one of the interesting things is how split America is. You've got almost a 50-50 country, and that's why the margin is so small, and that's what's really causing the problem here, is that McCarthy's majority, if he had a 20-seat majority, this wouldn't be the issue we're seeing today. The fact is he can only lose 4, and there's a very small number, 5 to 7, who are basically saying, we won't vote for this starting position CR. So I think that's an element of it too, this small House majority.
Right.
And, his personal skills. Nancy Pelosi had a small majority to get more through. He just isn't able to get those last couple of votes that he needs.
Eric Wasson, we know you're busy. Thank you so much. Congressional reporter at Bloomberg News. Peter Atwater, president of Financial Insights, and check out his book, of course, The Confidence Map. Thank you so much.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Steve Case is chairman and CEO at his investment firm Revolution, co-founder, of course, of AOL, which at its peak, nearly half of internet users in the U.S. used AOL. So really just a game changer. And he's back with us on Zoom from Washington, D.C. Steve, it is great to have you back here with Tim and myself on Bloomberg Business Week. It's been a year since you published Rise of the Rest, How Entrepreneurs in Surprising Places Are Building the New American Dream. It's now out in paperback. How is the entrepreneurial spirit and the American dream doing, in your view, in the pursuit of it?
Well, I think entrepreneurship continues to be alive and well. And the message of the Rise of the Rest book is it just isn't alive and well just in places like Silicon Valley. It's places all around the country that are developing a strong startup ecosystems. And that's helpful because entrepreneurs who historically would have to feel like they had to leave where they were from to go to the coast to be part of the innovation economy now can stay and build and scale there and create jobs there. So it's been great to see the momentum over the last decade since we started Rise of the Rest. The pandemic has certainly been an accelerant, almost a tipping point in terms of more people deciding to move other places. So we've seen a dispersion of talent and a dispersion of capital and a lot of great ideas that are really kind of reimagining healthcare and food and agriculture and financial services and transportation and education. Some of the most important aspects of our lives and some of the biggest industries are really up for grabs in this next phase.
Rise of the Rest is the name of the book. It's the name of the seed fund as well, Steve. What about rise of the rates that we've seen over this year? To what extent is that hurting the startups that you talk to and you interact with?
Well, certainly when rates are higher, there's a little bit of a pullback in terms of the stock market valuations, as we've seen, and therefore a pullback in terms of particularly the late stage private market valuations, the pre-IPO valuations. So we've seen that dynamic over the last 18 months or so, which frankly I think is healthy and not all that unexpected. A couple of years ago, things were getting a little frothy in that later stage. And so we're seeing a correction with the growth stage of the market. On the earlier seed side, it's not quite the same impact. And particularly in these Rise of the Rest cities, the valuations of the seed investments we've done with our Rise of the Rest fund, and so far we've done over 200 investments in 100 different cities. Valuations tend to be about half of what the valuations are for comparable companies at the seed stage in places like Silicon Valley. It's a classic supply and demand. So much capital is focused on, venture capital focused on Silicon Valley, not enough on other parts of the country. So that dynamic still creates a great opportunity for investors who are willing to do the extra work to identify promising entrepreneurs tackling big industries in dozens of cities all around the country.
Well, and that's a really good point that you talk about all of the innovation that's going on in other cities beyond Silicon Valley. Having said that, the collapse of Silicon Valley Bank and the fallout, what did you see as a result of that in terms of the work that you're doing and the investments that you're doing? Or none, maybe?
It was a problem. No question.
Yeah.
Even though it's called Silicon Valley Bank or SVB, they actually banked startups all over the country, not just in Silicon Valley. And about half of the startups and about half of the venture firms in America were banked by SVB. So it's been very unhelpful. A number of firms are trying to fill the void and offer different products and services to both the venture funds and to the entrepreneurs, but it's certainly been a negative this year.
Hey, one thing we really wanted to ask you, and was about what's going on in terms of regulation. We've been talking a lot about the FTC suit against Amazon, right? Antitrust case. We've all been kind of waiting for this. And the accusations are that Amazon is monopolizing the online marketplace services by degrading quality for shoppers and overcharging sellers. How do you think about this?
Well, I haven't read the actual case. Obviously, as you said, it's been expected for some time. The FTC has gotten more aggressive on big tech.
Is that good? Is that good that they've gotten more aggressive?
I think more scrutiny of big tech, I think, is healthy. My focus is around the new companies, the entrepreneurs, the insurgents that want to take on some of the bigger incumbents and making sure that there's an environment that allows innovation to flourish, entrepreneurs to be successful, including in areas of e-commerce, or they have a similar case with Google on some issues related to search. So I think that scrutiny is appropriate. Exactly what happens, each court case obviously needs to kind of just, we'll have to see how it plays out. But I think it is important that we make sure we're erring on the side as a nation of making sure entrepreneurship can flourish everywhere, and big tech doesn't just get bigger, including, by the way, with AI. One of the big debates here in Washington around AI as it gets more attention is it going to end up being a few big companies getting even bigger, or is it going to be a broader, more dispersed innovation ecosystem, a little bit more on the open source side? And so I will see how that plays out over the coming years. But the internet's now so important. Technology is so important. Every industry really is now tech enabled. Every company really is in some ways a tech company. It's not at all surprising that there's more antitrust scrutiny.
Did it ever feel like to you that AOL, in your days of founding and running AOL, was so big that it could have faced more antitrust scrutiny?
No, we actually did, and some of the News Corp and others at one point, filed suit saying AOL had too much control of the internet, and even when we merged with Time Warner, that Microsoft, AT&T, others were trying to block the deal with that, that argument. And so, in that particular case, obviously, I hate to say it, but for a whole host of reasons, AOL fell by the wayside. New entrants, including Google and Facebook and others, kind of took over, and it's because those news companies were able to start. They were able to raise the venture capital. There were not barriers to entry to allow them to start. So that's, to me, the philosophy we need going forward. Celebrate the successes we have in our country, including some of these great companies, Amazon and Google and so many others. But how do we make sure we're also creating an environment so more of those companies can be the big companies of tomorrow, not just on the coast, not just in Silicon Valley, but all over the country, which obviously is why I wrote the book, Rise of the Rest.
So how do we do that, though? I mean, we spoke to Diana Henriquez last week, who, compared the power companies of the 1920s and 1930s and the regulation of the power companies to the tech companies, the huge tech giants today. And she says government needs to get involved with them. What does the government need to do in order to ensure that the rest can rise?
Well, I'm co-chairing the National Advisory Council on Innovation and Entrepreneurship here in Washington. And we're working on a national entrepreneurship strategy, which we'll be releasing later this year. And there's a number of facets to it. Some relate to talent, including immigration policy. Some relate to access to capital, including some of the work around Rise of the Rest. Some of it relates to making sure there's continued investment in regional hubs. Congress passed the CHIPS and Science Act a couple of years ago and authorized $10 billion for regional hubs, but it's only so far appropriated $500 million of that. Some of it's making sure America continues to invest in the R&D, the technologies of the future to create the industries of the future. So there's many facets to it, but the overarching theme, I think, is how do you make sure this next generation of entrepreneurs can start and scale and do it anywhere in the country, not just a few big companies being able to innovate or only people in a few places like Silicon Valley. So it's trying to create a more inclusive innovation economy has to be a key part of the answer.
Steve, we're often so critical of other countries and their supportive industries. I'm thinking about China specifically, but we are increasingly seeing the U.S., whether it's in the semiconductor space, whether it's in the EV or the energy transition, support industries here in the United States. Should we, especially when it comes to some of the more newer, innovative areas?
Yes. And again, there's sort of this long debate about industrial policy, long debate about how much of a role should government play. But the reality is the internet wouldn't exist if the government hadn't funded, DARPA, a research agency, a half a century ago, and then opened it up, commercialized access to the internet and broken up the phone companies. So the cost of communications, came down. There are a number of decisions that really unleashed the internet. So having that government role, I think, is important. That the innovators need to respect the role of policymakers. And I actually think in the next decade, the two mega themes are going to be place and policy. That we're focused here at Revolution around place, particularly Rise of the Rest. We think a lot of the big companies of tomorrow will have a policy aspect to them because of the nature of the industries up for grabs, and because Congress has passed legislation, about $3 trillion of legislation, the CHIPS and Science Act, the Inflation Reduction Act, the bipartisan infrastructure bill, that's going to really invest in these industries in a big way and create opportunities for investors, as well as ensuring that America has the right infrastructure, has the right technologies to continue to be the most innovative entrepreneurial nation in the world.
Got to say, Steve, every time you're on, you just leave us wanting more. So come back soon, and good luck with the paperback version, I should say, of Rise of the Rest.
Thank you, Carol. Thank you.
Okay, be well. How entrepreneurs in surprising places are building the new American dream. Of course, Steve Case.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg. Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Bad boys, what you gonna do? What you gonna do when they come for you?
All right, this next story, safe to say we're trying to figure out exactly who may be the bad actors here.
You can say bad boys.
Bad boys. Step back first. Google, as you know, maintains one of the world's most comprehensive repositories of location information. It can often estimate a user's whereabouts to within several feet. The company mainly gathers this information to sell advertising, but in recent years, police started dipping into it to further their investigations.
Yeah, the company's trove of user data now attracts thousands of requests from law enforcement across the U.S. in cases large and small. Police say the warrants can unearth valuable leads when detectives are at a loss, but to get those leads, cops often have to rummage through Google data on people who had nothing to do with a crime, Carol.
There's a lot of information there for them to go over. To better understand this process and its consequences, we dive into this week's Bloomberg Businessweek cover story with our Bloomberg News tech team of Julia Love and Davey Alba, as well as the editor of the magazine, Joel Weber. Joel's here in our Bloomberg Interactive Broker studio, Julia out there in our San Francisco bureau, and Davey on the phone from Stanford, California. As we said, it's the cover story in the new issue, on newsstands, online, and of course, on the Bloomberg. Joel, killer story.
Julia, Davey, and company have been working on this for a while, and from the moment I found out about it, I was like, tell me everything. And it required just a ton of data and analysis for us to actually be able to look at this story. But what it revealed is that there's a troubling element to how law enforcement has turned increasingly to Google over the past couple of years, and the location history that people have on their phone, search data, all of that has basically become a tool that can reverse engineer people who are at scenes of crimes, and sometimes being at a location, near a location, does not actually mean that you did the crime. And that's sort of where it gets interesting, and where privacy experts in particular are a little terrified of how this is actually shaping up in the real world. So Julie, let's start with you. How did you happen upon this story, and where did you have to go in order to piece it all together?
Sure. Well, in the wake of the Supreme Court's decision to overturn Roe versus Wade, there was a lot of interest in how law enforcement would use all of the data that Google has about us. And so we wanted to look at the search warrants that police are submitting to Google, because we knew that that was the best way that we could get a handle on what was actually happening. And so to do that, Davey and I and our colleagues fanned out to different courthouses around the country, and we just took it page by page, thumbing through these warrants, identifying the ones that were submitted to Google, and then scrutinizing them to see the nature of the case and what cops ultimately got.
So give us an example of how this has played out in the real world.
So one interesting example, there was a young detective in North Carolina. He's getting ready for work. He leaves his car running, and he comes out, and the car's gone, and inside is some police gear.
The police car is gone.
Yes, it's his personal vehicle. Yeah, but there's gear inside, and it's gone. And the department tells him, they're very supportive. They reassure him it'll be all right. But then they go to work, and they turn to Google. They send them a warrant for everyone whose devices were near the place where the vehicle disappeared. And they also asked for information about people who searched for the model of the radio. And Google told us that they didn't provide search data, but they did provide some location data. And so this is, just a real world example of how property crimes are attracting these requests.
And obviously with that information, they were able to get the radio back, right?
They were not.
Okay.
The radio is
Just
outstanding.
checking to see.
So, Davey, come on in on this, because what it really turns upside down, and you guys lay this out so clearly in the story, the idea of a search warrant, right, would be typically on an individual, right? And now you've got, thanks to Google, you can take a location and kind of search for information, but it feels like it opens up, that information can reach a wider swath potentially of individuals, some who may not at all be connected to a possible crime. So come on in on that.
Yeah, absolutely. So tech companies hold a lot of data on people. That's no surprise. But usually when you think of search warrants in the traditional sense, you would think, okay, police are looking at this one suspect. Let's go and learn more about them, and maybe we'll serve a search warrant to a company to get information on a particular individual, a suspect. In this case, police are using the most basic parameters to even jumpstart sort of leads when they don't have any leads. So they'll, for instance, give 4 location coordinates. These are just XY coordinates on a map. And then within these 4 points, you'll draw like a little polygon, and then they will say to a judge, like, we have reasonable expectations that there will be a criminal that we can find within this area if you sign off on this warrant for a certain period of time. So that's geofence warrants. And then, police are also increasingly using search warrants, keyword search warrants, I should say, which are, sort of warrants that are served to Google to try to surface people who have Googled a certain term. So in one of the cases that we covered in our story, there was a terrible crime. It was an arson, and a family died in this fire. And what investigators did was go to Google and say, hey, did anyone search for this address? So that yielded some suspects in that case.
Well, let's stick with that one, because that one hasn't totally played out yet, and it gets to, I think, maybe the ultimate tension in the story, right?
Yeah, absolutely. That one, the Colorado Supreme Court is going to rule on it. We don't know exactly when, but we're expecting it to come down at some point this year to just sort of decide whether or not Google providing that data to investigators was an overreach on the investigators' part. And if you think about especially searching on Google, that is just so many people that could ensnare. Going back to the example that Julia mentioned at the very beginning, police had served Google with a warrant for anyone searching on this particular car radio model, and Google did not turn over data in that case, to be clear. But you could imagine people like radio enthusiasts who might be searching for a particular radio model completely innocently, who could potentially get swept up in one of these warrants. So
I'm guessing privacy experts have something to say about this, and activists, because, if Carol, Tim, and I get swept up in the same search, I didn't do it. Okay, I didn't do it, but
I did.
Tim did.
Somebody borrowed my phone,
and I'm making fun of something that is incredibly serious. But what do the privacy advocates have to say about all of this?
Julia, you want to come back? Yeah.
Sure, yeah. So privacy advocates are very concerned about both of these techniques. The thing is, if there's no suspect involved, then the only way that Google can provide a list of hits is to search everyone's data. And so law enforcement will receive, a short list of people who fit the criteria, and they then have to go through and identify who they think, might be their suspect. But everyday people who had nothing to do with the crime are often swept up by these warrants. And so I think that's really the heart of privacy advocates' concerns. And legislation has been proposed in California and New York that would ban the police from seeking these warrants of Google. The legislation has stalled so far, but activists are still hoping to get something done on that front. And the Colorado case would also be the first time that a court weighs in on the constitutionality of that keyword search technique.
Okay, so how does Google feel all about this?
It puts them in a difficult spot. These are court orders. They're not optional. Google has to comply, and they often are important cases. However, safeguarding user privacy is, a key responsibility that they have, and so they have to walk a very fine line there.
Okay, so what about inside? There's the official Google response, and then there's what you were able to report from within the company with some great reporting. What did some of those sources reveal?
Yeah, so we found that there's a department within Google that's responsible for scrutinizing these requests. It's a mix of lawyers and LIS specialists, and those specialists, the rank and file, they're often just a few years out of college. Some of them harbor dreams of becoming a lawyer, and I think they're often quite motivated by this job of really scrutinizing law enforcement requests. We heard of examples in which they were really just looking for any reason to send the request back to law enforcement. In one case, an officer might send a request for email from an account ending in @gmail.com, but if the officer has a typo, if they say @gamble.com, that's a no. They would send that request back. Yeah. But nonetheless, if it's been signed off by a judge, eventually they're going to get something.
And by the way, LIS, Legal Investigation Support. I find this just fascinating because it's like Google's kind of, their hands are tied here, right? Like,
yeah.
If law enforcement asks for something, a judge signs off on it, they're gonna have to comply. But I love that there's like this element within the company that's like, you spelled Gmail wrong, you're not gonna get what you're asking for.
I once spelled Gmail wrong when I'm trying to pay a traffic ticket, parking ticket, so I had to pay it twice.
Oh,
yeah, because I got a late fee for it. So I always check how I spell Gmail.
But the point is, once they give information on a case, how can they pick and choose, right? Like once the door is open, like you do wonder if they're asked and requested, as long as they get the Gmail right. Yeah. Do they just have to do it, Julia?
Yes, I think there's an old adage in Silicon Valley: if you build it, they will come. They say essentially, if you collect this data, law enforcement will come knocking, and they will eventually find a way to get it. And so I think that's just the heart of this issue. Google collects this data in large part because it helps them sell advertising, and as a result, they are in this uncomfortable position.
Hey, Davey Alba, come back in here. I always wonder when people work on a story like this and learn so much about how our information is collected. Are you going to change the way you use these services personally?
Did you burn your phone?
I mean, I'm just curious. Like after reading the story, I want to change the way I use these services.
Well, yeah. I mean, I think it's a good reminder to all of us to take a look at our opt-out/opt-in options on our settings for various Google services. Google told us that this one product that they particularly use to store location data called Location History is off by default, but they do send notifications to people to sort of suggest, hey, do you want to turn this feature on? It could help you in all sorts of ways. For instance, if you wanted to remember where you were last week, or see how many miles you've traveled, or just kind of have a cool record of where you've been and what places you've visited.
Right.
And I think that that's not always clear when you're getting these features pitched to you, that there could be privacy consequences there.
I just want to end on a big number. Google says it received a record 60,472 search warrants in the U.S. last year. That's more than double the number from 2019. So this is
they're ramping up their use. All right, Julia Love, Davey Alba, and of course Joel Weber. This is the cover story. Check it out. Lots of details in that story.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We've got a great guest to get into what's going on when it comes to technology, but really the global battle among the three dominant digital powers when it comes to regulating the space and influencing it.
Yeah, it's the subject of a brand new book, Digital Empires, The Global Battle to Regulate Technology, written by Anu Bradford, professor at Columbia Law School and senior scholar at Columbia Business School. The book, a follow-up to her book, The Brussels Effect, a term that she coined. She joins us on a Zoom here in New York City. It's good to have you with us, Professor. How are you?
Good. Thank you so much for having me.
Well, thanks so much for joining us. It's so interesting. We talked about regulating technology last week. Diana Henriquez, who wrote a book about she's written many books, but her most recent book is about the SEC and the development of the SEC under FDR. And we asked her what needs to be regulated in this day and age. And without hesitation, she said it was technology. And I'm wondering, how are you looking at that through the lens of your book, especially outside of the United States?
Yeah, so there certainly is a growing consensus around the world that technology needs rules and the governments do need to step in. But there is no consensus what those rules really ought to look like. So in the book, I argue that there are three prominent ways to think about governing technology. There is the American market-driven way, there is the Chinese state-driven way, and then there's a third, the European rights-driven regulatory model.
Talk about the European one, because that's kind of fresh in our thoughts because of what Apple did with its new USB-C connector, because that's the result of regulation.
Absolutely. And that was one of those manifestations of the Brussels effect, whereby rules that are set in the European Union find their way into the global production and global conduct of the tech companies. But basically, unlike the Americans that really have focused on free market, free internet, and sort of maximizing the opportunities for innovation, or the Chinese, that really want to bring the state there to leverage technology, including to maintain political control, the European rights-driven model starts from this presumption that digital revolution needs to be human-centric. The preservation of the democratic structures of the society, the fundamental rights of the individuals take the center stage, but also incorporates this notion of a more fair digital economy so that we redistribute some of the gains from the tech companies to the smaller players, to users, and to the public at large.
So, Professor Bradford, is it kind of going to follow the same path as we've seen to some extent with climate regulation and oversight, and also even, I feel like, global regulatory oversight when it comes to markets? It does feel like the EU leads the way on a lot of stuff.
So that is exactly right. So the Europeans have consistently just shown that they are much more comfortable with government intervening and much more skeptical with the idea that markets on their own, left to their own devices, would generate optimal outcomes. So the Europeans have been the forerunners when it comes to regulating food safety, consumer protection, the environment, the battle to mitigate climate change. And now I think one of the newest frontiers has been the regulation of technology, where again the Europeans are showing the way.
Why is it so important that we be having this discussion right now?
So I think that if you just look at the vast power of these tech companies, they have the economic power, political power, informational power, cultural power. They're really shaping the societies and the lives of individuals around the world.
And I will say, just for a second, when we had Diana Henriquez on, when we asked her, who are the power brokers? Back in the 1920s, it was the industrialists, right? And she made the point of the power brokers today are those that are in control of data, whether it's Google or, Amazon, pick your company, but they are the power brokers. But anyway, go ahead and continue.
That is exactly right. And that is one of the main concerns, that the Europeans in particular take the view that we cannot let these companies to be the power brokers, that we need to then bind them to the rule of law and subject their conduct to democratic oversight. So we do need to bring the governments that are representing the people back to the table and then sort of directing the course of our digital economy.
Based on the books that you've written, the research that you've done, the work that you've done, which approach is the best?
So look, I am a believer in the digital transformation needing a liberal democratic foundation. So there is no way that I can endorse the Chinese digital authoritarian model. I think that is too oppressive. It infringes individual rights and liberties and subjects population to massive mass surveillance. So I have many issues with the Chinese model, even though I must recognize that China has done really well in developing technologies, even without having freedom as the foundation of the society. But if the Chinese model is too oppressive, I think the American model can be viewed as too permissive. It has really failed to step in to protect the fundamental rights, to protect our data, and just place too much of the trust in tech companies that have then failed to carry out their task as guardians of our data and protectors of the digital space. So that really leaves the European model as the one that I think best advances public interest and checks the corporate power, and ultimately then leads to a more sort of fair, thriving digital society.
So does the EU and the US align on this? Because it sounds like that's what needs to happen.
I think that is exactly right, that ultimately you would need both the US and the EU to join forces and align behind a sort of same set of principles for that governance model to be effective. And I would say that there is a shift underway in the US. So the US itself is now starting to rethink its techno-libertarian commitments and starting to ask whether the markets really are capable of governing the digital economy. And you see the public opinion polls shifting. You see that many bills being proposed in Congress. And that indicates that there certainly is a different conversation about technology that is much more closer to the European rights-driven model than what we've seen in the past.
You write that this battle over digital, quote, will ultimately determine the soul of the digital economy, defining what kind of society we will live in for years and decades to come, in a battle that the U.S. nor the EU can afford to lose. If we don't get this right, then what?
So what ultimately to me is at stake here, the biggest battle is really about liberal democracy. And I think the US and the EU should remember that liberal democracy can be lost in one of two ways. So one is if the US and the EU lose the horizontal battle to China and the world is turning more authoritarian. But also, if the US and the EU lose their vertical battle to the tech companies and fail to effectively control them. Because if that happens, then the true digital empires are either the authoritarians or then the tech companies. And neither solution is sustainable for anybody who believes in liberal democracy.
You know, it's interesting, Carol, I say this over and over again, but if there's not much that unites Democrats and Republicans here in the U.S. in Congress.
But this does bring them together.
It does. At least the idea of regulating big tech, right? Quote unquote, regulating big tech. The way they want to do it is certainly different, and the reasons why are different, but, they want to do it.
It's a really good point, and I also feel like there's a fair amount of streaming services out there, or streaming series out there that reminds you when data takes over, kind of what happens to our world. Professor Bradford, thank you so much. Really appreciate the time with you. Anu Bradford, professor at Columbia Law School, senior scholar at Columbia Business School, on Zoom from New York City. Her new book, Digital Empires, The Global Battle to Regulate Technology.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including lots of laughs with Caroline Hirsch. She, of course, the founder of Caroline's on Broadway, on her next act. Also, a business travel primer from our Bloomberg Pursuits team, and the bank failure that rocked a tiny Kansas town, which may have involved pig butchering, the crypto version.
First up this hour, though, art imitating life once again. Dumb Money in theaters earlier this month. It's the real-life story brought to the big screen of the working-class Redditors who became investors during the pandemic. making and losing lots of money and turning Wall Street upside down in the process.
I recently caught up with Aaron Ryder, one of the film's co-producers, to get the backstory of how this project came together in the midst of the COVID pandemic and meme stock mania.
Yo, what up, everybody? Roy and Kitty here. I'm going to pick a stock and talk about why I think it's interesting, and that stock is GameStop.
Retail traders have hooked into GameStop. I think they think it's a good investment. It looks like there's one guy driving all the buying. Who is this schmuck?
All right. Well, art imitating life once again this week. Opening nationally today, Dumb Money, the real-life story brought to the big screen of the working-class Redditors who became investors during the pandemic, making and I'm guessing losing some money along the way as well. And perhaps even more interestingly and shockingly, turning Wall Street upside down. Jess, we were living this day to day as it played out during the pandemic.
Especially when you think of GME for GameStop, AMC, all these names that come to mind that were just taking off in the beginning of 2021. Right?
Out of nowhere. And it was like, wait,
what's going on here?
Fundamentals? Who cares?
Went out the window.
All right, so let's get to it because Aaron Ryder is producer of Dumb Money. As we said, this movie opening nationally today. He joins us on Zoom in Los Angeles. Aaron, no stranger to the big screen. Among other things, he, of course, did producer Christopher Nolan's Memento. So really good to have him here. Welcome, Aaron. Big day, big movie. We all lived it. So we've all been talking about it big time in the newsroom, looking at your trailer. There's a word in it that we sometimes say in the newsroom, but it was said a lot in the trailer because it was a crazy time. What was the spark, catalyst, media headline conversation that got your attention and made you want to do a movie about this?
Well, first off, thanks for having me. Great to talk to you guys.
Yeah.
So I was in Montreal up in quarantine when this was all going down in January 2021. Back then it was before the vaccines, as you probably remember. And when you went from the United States to Canada, you had to do a 14-day state mandated quarantine. So I was pretty much glued to the internet, just hearing all these headlines and seeing everything that was going down. And I could not escape all of this news about this store that I kind of knew about when you go to the mall and why its stock was going through the roof. And it was, you guys were covering it. It was everywhere. And so it was hard to ignore it.
So how do you take something that, it was in our face and all of us were trying to make sense of it. So how do you say, wow, that's really interesting and it's a conversation with your buddies versus I want to do something more with it. So take us there.
Well, I got this great phone call from a guy named Kevin Ulrich, who happened to own the studio that I have a deal with, or had a deal with at the time. And he basically was like, look, I think there's a movie here. And the amazing thing about this, not just because it was in the headlines, not every headline will make a great movie, but there was this great David versus Goliath theme woven throughout this, and it wasn't just me or Kevin or anyone else that thought there could be a movie here. Half of Hollywood was chasing this story, thinking that it could be a great idea for a film, and so it became a real race to try to get the rights to a book or a podcast to serve as the basis for that story.
You also, from what I understand, tracked down Ben Mesrich's book, Dumb Money, Adventures of a Day Trader, which is what the film is based on. So get us there. How did you reach out?
Sure, Ben, it was kind of an amazing moment. I'd heard this rumor that Ben, who had written, he's covered so many of these things in his career. He's written books on so many great topics that have been turned into great movies, including Social Network. And so I heard that Ben had a book proposal, and everyone was after it. So I kind of found my way into the heart of his agent and convinced him to get me a copy of the 7-page book proposal that he was currently writing on the phenomenon that we were all watching. So I heard about it and did what us producers do. We chase material and good ideas and got this book proposal. And, it was all kind of there. You could feel how you could easily turn this story into a narrative for a film that would capture an audience. So that was getting that thing and working with Ben, who could not have been a better architect of a story like this.
Thank you, Wall Street, right? It just kind of continues to give and give, whether it's the great financial crisis, whether it's tech bubbles, whether it's the creation of some incredible companies. There's just unbelievable stories. Having said that, when you look at something like what happened during this meme stock era, there's a lot of stories in it. There's, just the trading element. There's the individuals who were involved who were not the normal people, Aaron, that we here at Bloomberg typically write about.
No, you're 100% right. It was like in this moment, as we were all trapped in our homes, maybe with a little bit more money from the stimulus check that you got, and we were glued to, we did not have the connectivity to our friends or our family. We began to form communities online. And I feel like this moment was like the moment that Wall Street was gamified and in some ways democratized, where people that normally hadn't been investing on Wall Street and paying attention to these sort of things, they gathered around this movement, and an army gathered. And I feel like this was the first time that we saw that, and Wall Street felt the impact of that army that gathered.
How did you think about what the stories you wanted to tell specifically, right? Because it's really fun to look at the trailer, and I was thinking about, Ken Griffin and, others that are certainly individuals that we talk about all the time here. Steve Cohen, Gabe Plotkin. So there's, the establishment side of it. Then there's the Redditors in terms of, these people, their worlds were changing dramatically. So just as you approach this project, what were the stories you wanted to make sure you got out there?
Well, it's a great question. We really wanted to make this movie about and for those people that were on the Reddit boards, the people that were involved in this and got involved. And, it starts with Keith Gill, Roaring Kitty. He was in large part the face of this movement and the person that we all kind of identified with the GameStop phenomenon. So you knew he had to be, the focal point of a lot of the story. And he very much, he is. I mean, that's where it all kind of started. So, and then it was really Ben's book and the research that he did. And Lauren and Rebecca are two screenwriters who were able to kind of do a bunch of research and find these real people who went through this experience. And there's so many. The hard part was kind of discerning the people that were involved with this and finding those really great stories that had a satisfying ending to them or had a little bit of tragedy to them, the things that would make a good movie. We weren't making a documentary here. What we're trying to do is make something that shows this moment in time that we all lived through, but it was actually really a fun moment because we'd never seen anything like this before.
I'm curious who you talked to. I remember talking to Oliver Stone about Wall Street and then the sequel of who did you talk to get the feel? Even the same thing with Billions. We've done a panel here at Bloomberg and the guys who did you, because they really did talk to, folks on Wall Street really to kind of get the feel and make sure they were accurate. Who did you talk to in making this?
Well, look, there's so much stuff that's out there.
That's true.
Internet right now. Yeah, there's so much stuff that you can learn. And there's so many things in the headlines because everybody was talking about this. And when you go see the movie, it's a very easy film to understand. You do not have to be an investor in Wall Street to understand this movie, nor do you have to be some sort of economics major to understand what was going on here. It's a movie for the everyman, and that's really important in the construction of it. We didn't want to be weighing this down with jargon about, the economy or jargon about investing and that sort of thing. We're trying to make it for an everyman. So we took that approach. And so in our research, it was really focusing on the everyday people and how they look at investing and how they look at the stock market and how they maybe even see that the system may very well be rigged.
Aaron, I was wondering, when you were, certainly reading the headlines like the rest of us, did you trade in any of these? Did you actually participate in any of this in terms of the market trade?
It's really funny, actually, because I hadn't.
You're going to say yes, aren't you?
Yeah, I totally am. I actually got my Robinhood account. I wanted to understand how it worked and how it operated. So I got involved with Robinhood, and I wanted to see how people were doing it. So I very much participated. I got involved with that, and I started to buy a couple shares here and there to just kind of see how the everyman was going about it. And I needed to understand how the apparatus worked as well. So yeah, I got deep in it. And I think there's no other way to really understand it unless you're doing it.
Yeah, I totally agree. Did you make money in the process?
Or I can't. I'm not even going to tell you how much money I lost.
And that's part of it. What's really kind of wild, though, these individuals who started. I'll be honest with you. I just remember on a day when we'd have to highlight a stock, and obviously we're going to highlight these because they were moving in such a dramatic way in a market where these were names and individuals who were shaping the overall trade. It was pretty phenomenal. Aaron, don't go anywhere because I'm curious about the actors that were lined up and just as the movie progressed, just what you were kind of feeling and the feedback feedback you were getting. And I'm also curious about the real live Steve Cohen's or Gabe Plotkins or Ken Griffin, if you've heard from any of them. So hang on. We're going to come back to you in just a moment. We're going to continue with Aaron Ryder, producer of Dumb Money, on Zoom from Los Angeles. I have to say, Jess, I haven't seen the movie yet.
Neither have I, but
I was thinking about, like, you were here, right, with all of our Wall Street team and reporting on things, and it was just kind of crazy.
It really was wild, and you couldn't stop following it. And obviously, as a reporter, I had to, but I couldn't take my eyes off of it, even when I was not reporting on it.
And then there was a reckoning because the regulators got involved. So we're going to come back to Aaron Ryder in just a moment, the producer of Dumb Money. Delighted to still have with us Aaron Ryder, producer of Dumb Money, on Zoom in Los Angeles, the movie opening up nationally on this Friday. Aaron, how easy was it to make this movie in terms of financially getting the funding?
Well, no movie's ever easy to make. It's a bit of a miracle when we actually pull it off. This one, it was a little bit complicated. We started out with I had to deal with a studio, MGM, and we started to make the movie with them. But somewhere along the way, about in pre-production, MGM had sold themselves to Amazon, and that's when things got a bit more complicated, let's say, just because you have this brand new giant entity that takes over a movie studio, and everything kind of slowed down. So we were not able to move forward under that sort of deal that we had made. So we went out and found ourselves independent financiers, and we found an excellent partner with a company called Black Bear, and Teddy Schwartzman came on as our partner, and we made the film together. So it started out as a studio movie, it ended up independent, and then we found a home with a studio with Sony. So that's how it came together.
I have to jump in because if Schwartzman sounds familiar to our audience, which it certainly does, Steve Schwartzman, of course, is his father. Steve Schwartzman, I've talked to him. He's the co-founder, or founder, I should say, of Blackstone, the private equity giant. So it's kind of interesting to have that funding behind this film, and a film that also kind of makes a little fun of, right, the hedge fund dudes. I mean, they really, kind of really were caught off guard during this whole process, if you will, of the meme stock craze. A lot of them were shorting some of these names, and it really was uncomfortable for them. I'm curious about how you thought about their portrayal in the movie.
Well, look, these are real people, obviously. We did a really good job at trying to tell the truth here. And our job is first and foremost to make a really compelling and entertaining movie. And just so happens that the subject matter made it very easy for us to be able to do that. So, we weren't out to try to overly vilify anybody. It was just to tell an honest story of what happened in this one particular moment in time.
Well, exactly. Talk to us, too, about the actors. The lineup is pretty amazing. Paul Dano, Pete Davidson. Right? Yeah, talk to us about this cast.
Sure. I mean, look, it all started with Paul Dano, because we the face of this movement, as we said before, is Keith Gill, and who's going to play that? He's iconic now, and so Paul is somebody that both Craig and I really had been trying to find something to do with. He's just an exceptional actor, and he just embodies Keith Gill to such a degree. He's got this great sense of humor and energy to him. And I think you'll see Paul in a way you've never seen him before. And as far as the rest of the cast goes, it's an embarrassment of riches, to be honest with you. We have such a great lineup, mostly people that have been friends that myself or Craig have worked with in the past, between Seth Rogen and Nick Offerman, Pete Davidson, Shailene Woodley. It's kind of a remarkable ensemble. One I'm really proud of, and a testament to the fact that I think everybody knew this story in one way or another, wanted to get involved.
I love that. Is it a little frustrating with the Hollywood actors strike that this incredible lineup of actors can't be out there talking about the movie?
A little frustrating might be an understatement.
Sorry.
Yeah, it is. It's unfortunate, but we feel like this moment is the moment for this movie. Given what's going on in the country, the division we have, the fact that we all lived through this, it just feels like this is the right kind of movement and right kind of moment for a film like this. And I think it's reflected in the strikes that you're seeing all throughout the country, not just in my line of work with the actors and the writers going on strike, but the auto workers and everyone else. There's a lot of disparity out there, and I feel like this movie does a good job of highlighting that. So we felt like now's the time to show this to the world. And yes, it's disappointing not to have actors there because we went through the journey with them, and it's always a lot of fun to go out and promote a movie. But it seems to be generating a lot of interest. I like to think that, what do we need the actors for, right?
Ouch. Your phone's ringing, kidding. Aaron. No, it's interesting. Well, the Times, I thought, said it really well, too. They said, your movie about a populist uprising, right? These, kind of small retail investors, these guys just kind of doing their thing on Reddit and elsewhere, and really kind of bringing down the establishment in terms of the trading environment. And you think about these hedge fund titans, like it's pretty remarkable. But as you say, like we also are seeing workers really step out and speak up for their own rights. In terms of Hollywood, what is it that, I think about our audience, a smart audience, though, needs to understand about what's really happening there at those picket lines in a world where we're talking a lot about, the next level of artificial intelligence and what kind of jobs that takes out and what it means for the creative world?
I think it's, we've reached the moment, an inflection point, if you will, and most industries go through it. The entertainment industry certainly has its moments as well. It happened back in the early 60s when actors went on strikes about residuals and that sort of thing as television became more and more prominent. And we're in that moment right now, and it's in large part, it was probably going to happen a couple of years ago, but the pandemic disrupted things. And so this was a moment that was bound to happen with this, the proliferation of streamers and that sort of thing, changing our business dramatically, which it has. And so with that sort of change comes a recalibration of how people are paid and what fair wages mean. And so, not just in this industry, but I think in multiple industries across this country. So we're in that moment right now, and we're all feeling it. And I hope things settle sooner than later, and we find that common ground of fairness, so everybody can get back to work.
Hey, just have about a minute and a half left here. Is there a favorite moment of yours in terms of making the movie, or the process? I know it's hard for you to be like, yeah, this is my favorite, it's my baby, or my latest baby. But is there, take us a little bit behind the scenes.
It's two things, like it's hard, as we said, it's hard making the film and pulling all these elements together, and it takes a lot of energy and certainly a lot of money, and you have to hope that the movie gods smile upon you. But for me, it's always two moments in any given film. It's the moment when you pull the whole thing together on the first day of photography. And I think about it all the way to the first moment made up until now. And when you're standing behind the director and you got everybody ready to go, and the director kind of says action. To me, it's like, I feel like a moment of triumph in that moment, thinking, okay, well, this is happening now, and this story will be indelible. Those kind of moments are never lost on me. The second part is when you show your film for the first time in front of a large audience, like we had the opportunity to do in Toronto, and have an audience receive the film the way it did, with a standing ovation the way we had it, and just see how people really enjoyed the film. There's nothing more rewarding.
Well, we're looking forward to see it. I have to say, I haven't seen it yet, but I will. I certainly lived it, reporting on it. So fascinated to see the interpretation that you guys did, because it really was a remarkable moment in time for anybody who's been watching financial markets. Another remarkable moment in time, and good to see you guys put it to the big screen. Aaron, good luck with it. Aaron Ryder, producer of Dub Money, as we said, opening nationally on the big screen. So check it out. He's joining us, of course, on Zoom in Los Angeles.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Make 'em laugh, make 'em laugh. Don't you know everyone wants to laugh?
Yes, indeed, everybody. Let's make them laugh and laugh a bit more. I mean, I gotta say, it's not always easy, considering the news flow and the stresses that are out there, right? Economic, personal, or otherwise. Gotta love that from Singing in the Rain.
You know what, though?
Dennis O'Connor. What?
It's actually good to laugh.
I know. Okay, so
this is good for us.
We are nerds, but
Speak for yourself.
The Mayo Clinic points out that when it comes to relieving stress, more giggles and guffaws are just what the doctor ordered, noting that a good laugh has great short-term effects. When you start to laugh, it doesn't just lighten your load mentally. It actually induces physical changes in your body, including stimulating your organs, soothing tension, improving your immune system. So everybody in the control room, you better be laughing. No more. Yeah.
I better go to the comedy festival, the 17th annual New York Comedy Festival.
Yes. About to get underway in early November. A legend in the world of comedy is with us today in our studio. Caroline Hirsch, founder of Caroline's on Broadway. Of course you know that. She's here in our Bloomberg Interactive Broker studio. Welcome, welcome, welcome back. How are you?
I'm good. So we have quite the medicine for you. The New York Comedy Festival.
My voice doesn't usually sound like this.
The New York Comedy Festival, November 3rd to the 12th. We've extended it this year. We're 10 days straight. Probably about 150 shows, still counting. Wow. We're still adding. We're still putting people together, so still announcing new shows coming up. 22 theater shows, so we're very, very happy.
Caroline, I just had family in from Texas, and you know what they did? They did a bunch of things around New York. It was a short weekend. They went to a comedy show. People want to experience things. How did you guys think about that? Like, are you seeing increased demand or a lot of demand coming out of the pandemic of people just wanting to go to things like comedy shows?
Well, I think that in general, people want to go to live events, and I think live events are like the big thing right now. So, look, when we put tickets on sale, we got a really, really robust kind of reaction to it. So ticket sales are really, really good.
That's great to hear.
That's good. It's good for New York.
Okay, give us some names.
Because, who's going
to be there?
Burr at Madison Square Garden.
Okay.
Shane Gillis at Carnegie Hall. Matteo Lane, Jimmy Carr, Anthony Jeselnik, all at Carnegie Hall. And you know what happens that, people go to Carnegie Hall and then they'll go to the restaurant across the street.
Right.
So what we do is bring this stimulus to New York City, which we're always happy to do, and we have a lot of fun with doing it. And then we have, we have Brett Goldstein. Do you know him from Ted Lasso?
Yes.
So he's doing 3 shows at the Beacon.
Wait, can we all say what he says? Oh no, we can't say that on air, can we?
You can, Carol, but it might be your last show.
We do say it a lot in the newsroom, but go ahead. He's so great.
Yeah, and then we have, we have a big event, which is Stand Up for Heroes, which kind of opens up the festival this year on November 6th. So we have Jimmy Carr there, Tracy Morgan, Rita Wilson will be singing, Shane Gillis, Ronnie Chang, Jon Stewart, who's a constant there, and also Josh Groban and John Mellencamp. So that is quite a show.
Are they doing comedy? Those last two?
Might be.
Are they singing?
They're singing.
Okay.
They're singing.
That's so cool. How do you think about when you put it together? 17 years and running. Talk to us about like how it's evolved.
Oh, it's 19 years. The festival is 19 years and 17 years for the Stand Up for Heroes. But it's 19 years. Next year we're having a big blowout, the 20th year in New York City.
Wow.
We start the day after we finish here. We start for next year. Actually, we're trying to secure venues already for next year. Our big shows at Madison Square Garden. So we do that constantly.
We don't often, because we have a global audience here on the program.
Do we really?
Yeah, we do.
I had no idea. That's some comedy for you. I'm only kidding.
I'm looking into the control room to see if they can save me. They're not laughing in there, Carol.
I know. I'll stick to my day job.
But we do, and we have a national audience as well. So why are we talking about something here in New York? Well, because a lot of people from all over the world and all over the country come to this. Talk a little bit about who this attracts and sort of where New York is right now in the comedy scene, because there are people who are saying, okay, LA is, a classic place for comedy. You got Joe Rogan in Austin doing his thing, trying to make Austin comedy happen. Where do you stand on all this?
Nah, you can never negate New York.
Okay.
Nah. You can't take the New Yorker
Says
out of
a good New Yorker.
No, it's here. It's where it starts. This is where you get the creative juices. This is where you get the ideas. The whole thing with LA was that, which is not so quite in fashion right now, is to go out there to get your sitcom. That's not really happening anymore. Now it's
wasn't happening over the last 5 months without the writer's strike. I can tell you that.
I guess they're back.
That's a really good point, because you did see a lot of comics for a long time, right? Get a series and then just move to television. It's kind of not happening.
But now the touring that goes on, when you have a great special that's on TV, you take that and you go on the road, and that's your millions of dollars that these people, comedians are making on the road. When you're selling out Beacon Theaters, Carnegie Hall, when you're selling out the Garden, this is big bucks. So it's a big business for a lot of people that have really, made it and are able to tour around the country.
Can we talk about the business of comedy? And I think about, last December, your iconic club, right? You did not renew your lease. It's spot in Times Square. How hard was that?
I wanted to stay, and then there was a part of me which did not want to stay because of the way, and I don't want to put down Times Square because I went there 30 years ago to build it up, and I was part of that, the renovation of Times Square and the renewal of Times Square. So I'm not going to put it down, but things were changing there. The city was changing there. I felt that after COVID, the whole seascape there was changing. And I said, let me step back. I own the brand. I want to take the brand. I'm extending it through the festival. And then we have other ideas where we're going with that.
Okay. Give us some of those other ideas.
Yeah, well, we're taking the Caroline's brand and, kind of producing content and putting it out there and specials and everything else that we do with comedy on a grander scale.
I mean, it really was the end of an era for you not to renew your lease there.
Well, yeah. I was there 30 years in Times Square.
So, I mean, Times Square changed a lot in 30 years, and it changed a lot just in a few years because of the pandemic. Talk to us a little bit about what happened and the decision-making process and the external factors there too.
Okay, so obviously I went to my landlord and I go, listen, we need some relief here. Things have changed a lot. So can you? He goes, no, actually, we really want to raise the rent. So I said, but there's so many repairs that have to be done. I'm here for 30 years, air conditioning, electrical work, just things needed to be upgraded. And he said, well, that's just what the deal is. And I tried very hard to stay there. And then I just said, well, I'm out of here now at this point.
I'm done.
I have other things to do.
Did you look for other physical spaces?
No, but I have to tell you that we had so much press when we closed that so many real estate developers called me.
Wow.
And said, I have spaces for you, and I will even help you build it out.
So why didn't you do it?
Well, I'm in the process of taking it all in and deciding what the next big move in. It'll be 4 walls, but it'll be something very different.
What a great feeling.
That is pretty cool.
Right. What a great, so this is like a to be continued?
Yeah.
You'll come back in 2 months, 3 months, 4 weeks?
I hope sooner, yeah.
Can I ask you, what do you find funny today? Are you crying? Oh my God, she's actually tearing up.
It's good, I'm laughing. Yeah,
oh my God, we need laughter. What do you find funny today?
You know what it is? You know what I find funny is that it's almost the point when a joke it reaches a point where it is such a great joke that it hits the point that it's almost politically not correct. And those kind of jokes.
Carol wants to talk about.
Those kind of jokes are brilliant. To get to that line, make your point, but not go there.
Remember when we could say, it's a joke, people. So
you can still say that.
No, you can't. It's how tough. Well,
it doesn't matter if, Netflix staff walk out over, your special. You're still selling out arenas across the country. I'm talking about Dave Chappelle here.
That's the truth. Yeah.
Is it tough for comics today, though?
I don't think so. I just think they need to stay on a steady, straight path, and I think that they do realize that things could be offensive. And I think that, look, I've seen a lot of male comics change a lot of stuff, what they used to say. They wouldn't dare say that. I mean, they get strangled by every woman in the audience. But things have changed like that. And I think people are, mindful of other people like that. Like we were just talking before I walked in here, I was talking about Don Rickles today. We said, oh my God, he couldn't insult people like that today.
That's a good point.
I grew up
watching. But it was a joke.
Don Rickles, Dean Martin, all those guys. But
you think self-censorship is real?
I think it is. I think it is. But to a good self-censorship, not anything like. I think it's good. But it's that brilliant joke that may cross the line but doesn't, and those are the greatest. Those are the greatest
jokes. Who
jokes.
can still get away with stuff? Who can really push it? Are there certain comics?
Well, Dave Chappelle can. Ali Wong can. Mm-hmm. That's a woman that can hit that mark of not crossing the line, but crossing the line.
Where you going?
My turn.
Where you going?
Okay.
Go.
I want to know your opinion, Caroline, about the role of comedy clubs today, given that there's YouTube, there's TikTok, there are all these places where comedians, up-and-coming comedians, can post their content and build a following there.
that's a good thing. That's a good thing for clubs, because when they build the following, then they get booked into the club and they make really nice money and everybody's happy because they sell out. So it's also still that live experience. People still want it. They want to go in that room with you and me and all laugh together. That's what they want. That's the thing about what makes a joke. It's that the community is sitting there saying, oh God, that happened to me too, and you laugh. So it's all part of that live experience. And I'm seeing that with the festival, as everything is, everybody in the festival has a terrific online following. I mean, millions of people.
It's a huge part of their job now.
But they want to go out and see them. The same thing that happened years ago when you had that great HBO special. That built you up so that when you toured around, you would sell out.
Right.
So that's all money in the bank for the performers.
The 19th Annual New York Comedy Festival this November. I'm giving you a shameless plug. Hey, listen, take us back, because you've been doing this a long time. Back in the early 80s, you began. I mean, Jay Leno, Jerry Seinfeld, Pee Wee Herman, Billy Crystal, Robin Williams, Sandra Bernhard. I know. Chris Rock. I know. It breaks our heart, right? Like, these are people that were funny like no other. And changed, I think, the way we see comedy, enjoy comedy. Yeah. But in the early days, is everyone funny out of the gate?
Well, you see, we were just talking about Bill Maher. So, Bill started at my little club on 8th Avenue. But of course, you grow over the years. Jerry Seinfeld, you grow over the years. Jay Leno, grow over the years. But Jay has always been this Menschy guy.
And Jay tours, Jay tours like 4 days a week now.
Probably every weekend he's out doing something. And so Jerry Seinfeld. Every weekend he's probably somewhere doing 2 or 3 shows, back home again during the week, and that's really his life, because he loves what he's doing.
What do you remember from these guys in the early days?
We were all so new to it. It was like, when I opened Caroline's, it was like the first headliner club in New York City. It was like a yuppie, that word, yuppie, we're going back to the 80s, yuppie nightclub that opened up. And it was when David Letterman was at 12:30 at night. Jay Leno would be at my club, and he'd say like, oh, I'm appearing at Caroline's. It gave us this national play around the country. And that kind of set up the club. And I remember, Paul Rubens, Pee Wee Herman, bringing him to New York. I have such fond memories of him. And, I didn't, up until he was texting me on my birthday, sending me birthday videos up until the end, saying, listen, we need to FaceTime soon. Are you coming to LA? I'm not coming to New York. Didn't tell me he wasn't feeling well, because we'd always text each other back and forth, and I had no idea he was sick. But he brought his show to New York. In New York, they conceived Pee Wee's Big Adventure. He was going to ride his bike from LA to New York City with this unknown director at that time, Tim Burton. Who knew? But that's what Paul had. He had that creative part of him. Those comedians that I worked with from the beginning all went on. Look at Jerry and Larry David's show, Seinfeld. Oh my God, earth-shattering. We still say, we were just talking about it last night. I still turn it on and see an episode I haven't seen.
Right.
So you always make references to Seinfeld.
I've seen them all, I got to tell you. Okay, so we only have a minute left, Caroline, but comedians who've made it love to say that in order for a comedian to make it, you've got to bomb. Give us some stories of some prominent bombs that you've witnessed in your day.
How about Larry David? And he would say, oh, it's the audience, they're just terrible. And he didn't do that once or twice. He did that all over.
I can see that. I can see the Curb Your Enthusiasm, Larry David saying that.
They're terrible. They're terrible. They bomb. Yeah.
I got to say, and what you've done for women comedians, right, when they were just so far and few, and just to see everyone out there today, it's incredible. You are incredible. Come back anytime. Let us know the news if you land somewhere, okay? You can share it with us. And good luck. Again, remind us when the festival is.
November 3rd to the 12th. Go to NewYorkComedyFestival.com, and you would be amazed to see how many shows are listed there to go see, and have a great time.
Thank you so much. Good luck. Be well.
Thank you.
Caroline Hirsch, founder of Caroline's, of course, on Broadway, here in our Bloomberg Interactive Broker Studio. Carol Massar, Tim Stenovec. We're not funny, but she is, and
That's
her
true.
lineup is. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Time now out for a bit of luxury with our friends from Bloomberg Pursuits. And this week's issue of Bloomberg Businessweek magazine includes the return of the business travel special, highlighted by the debut of a series called 2-Night Minimum.
It's your personal travel guide to some of the world's most iconic destinations, designed for those who want to get to know the heart of a place in a pretty short time, whether they're in town for business or they're just passing through or making a weekend more of it.
Yeah, absolutely. We have the dynamic duo of Bloomberg Pursuits editor Chris Rouser and Bloomberg News travel czar Nikki Eckstein. Our first installment, 2-Night Minimum, comes courtesy of one of our favorite reporters, Brandon Presser, who whisks us to the Spanish capital of Madrid. But we also do want to point out that this section of Pursuits coincides with the launch of Bloomberg Travel. It's a department, Nikki, that you have been overseeing, and you're bringing together Pursuits content with coverage from all our different teams around Bloomberg. Can you just tell us a little bit about that?
Yeah. So do you want to hear our official tagline? I love our official tagline. The new hub for globe-trotting leaders covering everything from the business of travel to the most worthwhile experiences that money can buy.
Ooh, I like it.
So you've known and loved the most worthwhile experiences that money can buy. That's always been the Pursuits travel MO. We love to tell you how to spend your money well all around the world. But now, I think really, ever since the pandemic, we've really attuned our gaze to how important travel is as a pillar of the global economy. And we're really broadening our scope to think about that and how it affects government, people, economies, jobs, inflation. You know, all of these topics have a really, really clear relation point to travel and the travel economy. And so our coverage is inclusive of all of those things now. It has been for a while, and now it's more organized. You can find it more easily, Bloomberg.com/travel. It's a really exciting effort. I'm so proud to be leading it.
Well, it's really cool. And I do think about, Chris, how much time, Tim and I on a daily basis talk about the travel industry and the importance of it to the global economy.
Yes. Yeah. I mean, it's one of the biggest industries in the world. And Nikki is taking charge in making Bloomberg really cover it the way we cover all these other industries. And also giving smarter tools for travel. We're just the way you think about travel, how you can be a better steward of the world as you travel, but also how you can save money.
Well, Nikki, let's start by heading to Madrid, because as you and Brandon write in the piece, it's kind of not known as a place of, a destination in the same way that Barcelona in the past has been.
I mean, you're absolutely right. Barcelona has always been the kind of capital of cool and culture and all things hip and fabulous in Spain. And Madrid has really been the seat of government and banking. And I think it's been seen as more staid by comparison. But I've noticed, and I think, Chris, you've definitely noticed this too. We've talked about it in the last year or two. Everyone is going to Madrid. Madrid is suddenly the coolest place, maybe all of Europe. It's really had this incredible resurgence. And as we've learned, a lot of it has to do because people from broader Latin America have made it their new home amid the pandemic. A lot of people moved to Madrid. It brought in an influx of foreign investment. A lot of tech startups moved to Madrid, and it's just juiced the energy in that capital, made it a far more vibrant, cosmopolitan place.
All right. So if we've got a couple of days, how do we think about approaching it?
So our guide really allows you to pick and choose your own adventure depending on what your priorities are and how you want to spend your time. One of my favorite things about it is the section of activities, the kind of classic see and do section of a travel guide. We've switched it up in a way that's just way more efficient and plugged in. So everybody goes to El Rastro, the sprawling flea market near the Plaza Mayor, and people usually go on the weekends, and it's like a rat race of antiquing. But our version of this is don't do that. Go on a weekday. There are two beautiful shopping arcades, Galerías Piquer and Nuevas Galerías del Rastro, two streets basically that you can prioritize. We've given you the exact shops to go to, and we've told you the best things in those shops to buy. In this case, beautiful ceramics, little hand towels, things that will actually fit in your suitcase.
One of my favorite things in city guides is when someone tells you what neighborhood to walk around, because that's kind of what I want to do when I'm in a city, especially if I don't have a lot of time. And so we tell people to walk around Barrio de las Letras or Chamberí, and also the Prado. You can't go to Madrid without going to the Prado. We tell you the shortcuts and what to do, if you have limited time, which I love because you go in there and it's the biggest museum ever, and it's how do I even do it? And then we've got restaurants and hotels, so we really got everything, and then day trips too. So we really got everything you need to know for a weekend.
Nikki, let's talk about some of those restaurants because the food there is not to be missed.
And it's probably not what you expect either. Of course, there's all of the tapas crawling, and one of the things that I love is that we're not just giving you like a single place to go get tapas. We're giving you an entire kind of neighborhood. We outline a whole tapas crawl in Malasaña, for instance, with numerous stops and telling you exactly how to do it most efficiently. But then there's also places like Salmon Guru, which literally looks like the inside of a manga comic book. And it's this amazing, super hyper modern, futuristic cocktail bar with an Asian-inspired menu. Go there at risk of missing your dinner reservation because it's just so much fun to be there. And then there's places like Lenya, for instance. There's this one chef in Madrid that owns all of the best restaurants in the city. We've picked out the best one in his empire. It's Lenya. It's a steakhouse. And everything is done very dramatically with tableside flair. And foie gras is disguised to look like a little Granny Smith apple. The steaks are smoked. It seems just like the best place ever. So we've kind of curated it that way. Pick the best restaurant from the chef that has all the restaurants. Pick the one street to go for tapas.
It's like a great guide, right? When you just don't have a lot of time and you can really just figure out the things to do. I love it, love it, love it. The other thing I don't actually, on the flip side, don't love is all the fees I pay when I'm traveling. You guys, Chris, get into that as well. So talk to us about what you covered.
We have this writer, Ramsey, who is a genius on points and miles and finding discounts and how to sort of like efficiently go through the world.
Are you guys constantly calling him? And
I was just going to say, I need to talk to Ramsey when I book trips.
Well, yeah, we had some long talks after Delta changed their Sky Miles rules. So he went through to find these hidden fees because there's actually like legislation coming through. Biden has made this a priority to make increasing transparency on fees, like hotel fees. You show up, you thought you were paying one thing, and then there's like all these fees that are more.
This is like a resort fee.
Like a resort fee. Yeah, or airline fees.
How many times do you go to a work conference, right? And there's like the resort fee that we're never going to like.
I know, it makes you seem like you're at the spa.
I don't get as concerned about it when I travel for work, I'll be honest.
Okay.
But you know what? I have worked at companies where you have a very strict per diem, and those types of things can be really, really sticky, even for business travelers, I will say.
So Ramsey goes through and talks about airline fees, how to avoid them, fees for checking bags, things like that, resort fees, currency conversion fees, which actually I travel a lot, and I actually never know what to do when it says, okay, you're in a foreign country, do you want to pay in dollars or do you want to pay in euros? You pay in euros.
Exactly, and I didn't know that until reading this.
Because you pay a fee, right, for the conversion.
I know, what's wrong with us?
Nikki is so embarrassed.
But
Nikki's like, I can't talk to you three.
Nikki, it's not like Chris or I go anywhere, out of the U.S. Like, let's be honest.
We do this funny thing sometimes in our department where we have to ask people who sit around us, did you know this? Is this news? Is this new to you? And dynamic currency fees is one of the things that I always knew, but I took for granted how little known this is. And I didn't realize exactly why it happens. And so what happens is when you pay in dollars, you're automatically being charged a conversion fee that's built into that price. And it's usually between 2 and 3%. And if you pay 2 and 3% extra on all of your expenses across your travels, that adds up meaningfully.
All right. There's a lot more advice, too, when it comes to the value-added tax, which I know about doing. And
what about the digital one, Carol?
Shut
Do you know
up,
about that?
No, I guess I didn't know about that one. Really great advice. There's also some great coverage on weekender bags. Weekender bags. Did I say that correctly?
Yeah, weekender.
Weekender bags. Some really nice posh ones, to be quite honest. And then there's also like those great little cubes. My daughter's really into that. Like when packing, like you put them into cubes.
Packing cubes are a thing that I know that I should use and I don't. Like it's like a healthcare FSA. Like I know it's a thing that we're supposed to use.
Chris,
and I cannot
help you with both of those things.
What,
yes,
Nikki?
But I just after we did this story, I just bought some for my husband.
Okay, good.
I love that.
What, really? I was going to say, packing cubes are a belief system. I feel like you either live and die by your packing cubes or it just doesn't work for you at all.
I live and die
I'm not
by
a packing cube person, but I know so many people who literally cannot go on a trip without putting everything into cubes.
I think it's a good idea. I just haven't done it yet. All right, guys, listen. Great coverage, great kickoff, and so good to be talking with you all again. Our thanks to Bloomberg Pursuits editor Chris Rouser and Bloomberg News travel czar Nikki Eckstein.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
The author of the piece, Amanda Albright, wealth team reporter for Bloomberg News. She is on Zoom from Kansas. And then here in our studio, the editor of Bloomberg Businessweek, Joel Weber. Joel, this feels like a perfect Business Week story, but tell us about how it came to you.
All Amanda. So we have had a number of bank failures this year. Obviously, that was a theme that we were all over as an institution at Bloomberg earlier in the year. And a lot of those were the middle-sized American banks. What stood out about this one was Amanda's reporting, because it wasn't for the usual reasons that we saw with Silicon Valley Bank, or
wasn't a bank run.
It wasn't a bank run. It wasn't any of that. It was because the CEO maybe did some unwise decisions with crypto, right, Amanda?
Yes, that's exactly right. And that's one thing that even from the jump, people in Kansas stressed that this wasn't some bigger issue with Kansas banking or something specific to the state. It was a very idiosyncratic and specific situation. And my reporting definitely supports that as well. So it was different from earlier this year, but also a very interesting case on its own.
All right, so let's get into the details. Amanda, tell us about Shan Hayes.
So he is the CEO of this bank, Heartland Tri-State Bank. He's the longtime CEO. He's worked there in different iterations of the bank. Basically, he got his career there. He started as a agricultural loan and IT officer at the bank under a previous name. And so he is really just a kind of towering figure in this very, very small city in Kansas. I went to the city. It's a very far drive. But once you get there, everyone kind of knows each other. And so they all knew about Shane and they all knew about the bank. They were all still talking about it and all eager to talk to a reporter about it, even if they didn't want their name used. Everyone was kind of a buzz in the town about this. And, everyone had kind of different, sorry to jump the gun a little bit, but everyone had a little bit of different reactions about it, which we can definitely talk about. But essentially, Shane was this big figure within the community, but he was also a pretty important figure within Kansas banking. Across the state, bankers in Kansas and surrounding states all know who he is because he has this role on the Kansas Bankers Association, or he previously had a role in the Kansas Bankers Association. He was the chairman. And he also worked with the American Bankers Association in different capacities for them. And as part of that, he would go to Capitol Hill. We point out in the story that—
slow down, because we want to know what happened.
Yeah, so how did this guy with so much experience find himself asking one of his customers for $12 million in cash?
How does that happen?
Yes, I jumped the gun. Was excited to talk about the story. So
it's a great story.
Basically, one of my basically in reporting it, I got a tip that essentially this meeting had taken place where the CEO had asked one of his wealthiest clients for $12 million. During that meeting, based on my reporting, basically he asked if he could have $12 million and indicated that it was his personal money that was locked up in this crypto app. And, in order to get it out, he needed to put more money in. And that's kind of, even though we don't know exactly the specifics of how this all came to be with the crypto app and how he ended up putting it in and who directed him to do that, et cetera. And it might take a while to figure that out. But if anyone needs my phone number, let me know. But
that's a good reporter, man.
There are parallels to pig butchering scams where, he said he knew someone who was helping him with crypto investments, basically. And in pig butchering, usually they find someone and they are encouraging them to put money into a sometimes fraudulent crypto app. They say, just put a little more in and we can get you your money out. Maybe there's an issue with taxes or the wire didn't go through, try again. And it's really, really sad.
What's it like when you're driving out there and then you get there, and what are the vibes in a town like this when something like this happens?
Yeah. So the drive out there, I really felt like in order to report the story, I needed to go there. And, it's a pretty, sparsely populated town. It's very, even the layout is very insular. Like you can drive around all the neighborhoods and it's all kind of connected. Like I felt like I was able to get a pretty good feel for what the town was like, even just being there for like 2 days. People there are so nice. Very few people wanted their name to have anything to do with this story because of the sensitivities of it, but they were eager to talk about it, like I said, because I think, some people are very disappointed and upset. Some people are just straight up like they want the full scoop. They want to know what happened. They're eager for the gossip. So everyone had kind of a different perspective. And, this is a community where everyone kind of knows each other. When I was there, I wasn't sure if people knew that I was a stranger, but it did seem like some people kind of vibe about me and kind of may have known that I was a reporter. So it was really helpful to go there and get a sense of the community and just how it really is a very kind community. And so I think that's why people are very disappointed by what happened, because Shane was part of that. He was part of the community. He was known as such a nice person. And, I talked to someone who described him as a salt of the earth human being. And I think some people still have that view about him. Basically, people want to think the best of him in the situation. They want to know if he was trying to help the bank. They really want to understand why this would happen. And so I have a feeling this story won't be the last story we write about it, because it seems like there's maybe more to the story.
So I'm curious also about so many things in this. Do we know what kind of crypto it was? How long was he potentially involved in this? And then also, now there's a new bank in town. So what's it like to have, a bank fixture of this community in the form of Heartland Tri-State Bank, and then all of a sudden it's crypto scam, FDIC steps in, and now we get a new, not quite as local bank on your doorstep.
Definitely. I think that's a big concern within the industry. I didn't know this before reporting this, but there's been a major consolidation of community banks in the U.S. over the past few decades. And so the role that community banks play in a town like Elkhart, where, there's not a Bank of America there, they're able to step in and provide credit to farmers or local business owners that they know personally. And they're able to kind of gauge the economic conditions locally there. They're able to gauge, whether this person is trustworthy, and if they, believe in the person, they can give them this loan, they'll pay it back. They're able to use soft information to kind of develop their lending. And I talked to a professor, Jeremy Kress at the University of Michigan, who talked about just kind of how there's studies that show when you lose a community bank, there's less small business lending, there's less wage growth. There's all these knock-on effects that happen when a community bank is lost. So even though this other bank has come in, they've said that they're not laying off any employees. They basically said it's business as usual. The more that this happens, it seems like there are impacts. And I think with Elkhart, I would be interested for someone to come back in 5 years and see, did anything change with this new owner? How has this affected the local economy, which is very, very ad-based?
Amanda, I'm wondering what Shane Haynes is up to now. You started talking about what he was doing before this happened, but what's happened to him now?
He's very quiet. People around town have seen him. And I think, they are just as curious as me about his perspective on things. But we don't really know his view on what happened.
Do we still not know really what happened? Is that safe to say?
We know what I've been able to report. Sorry, I'm being careful with my words.
No, I know you need, yeah. That's fair.
There's still a lot of questions that I have about the story, which is why I was joking about people calling me. But, I'm curious if there was a person who, some of this is the story of what happened because I've heard from sources, but truly the only person who can really speak to the full story is Shane himself. If there was actually another person helping him do this, I'm curious about that. And so, yeah, it's something that now that I've been to Elkhart and talked to all these people, I feel very committed to reporting on this. And sorry if parts of the story are work in progress, but I definitely think in the coming weeks and months, we'll know more. But it seems like more of a sad story than anything, because people involved who are shareholders or, they don't seem to think that the shareholders are going to get.
Yeah. In a small town like this, it just feels like it's a thing that's going to probably rock people, and there's going to be a lot of interesting nuance that will play out. And obviously there are elements of the story that remain sort of a mystery, and we'll see what some of this ongoing sort of investigative kind of qualities unearth.
Is Amanda going to be finding herself driving on Route 56.
I mean, Amanda, like, you've got some cornfields to cover there. So you just keep driving west, I guess. Right?
This is Joel's Amanda. This is Joel's favorite place to assign stories. It's live on air. Just a heads up.
It's good that you're nearby, right, Amanda? To me, it's just like it is an amazing story. Obviously, bank failures have been a thing this year, and like here we are yet again, only for slightly different circumstances. We don't usually see this combination of things together in America,
well, I think
anywhere.
What stuck out to me so much about this story, Joel, is the fact that this person was not only in financial services, but was the head of a bank. And
in a small town, right?
And you don't think about people who fall for things like this as being, this quote unquote sophisticated, but it shows, again, we don't know the details of what it is, but that crypto scams can hit anyone.
And in a small town like this, where, it's a kind of a fixture of the community. And Amanda also did some great, reporting in the story about how vocal he was in D.C. about the importance of having these small hometown style banks. And in general, when we start to lose that element, I think that's part of America, right? Like it's a wonderful life, right? Like that's what we do here.
Right. And so important to communities. I was also thinking, Amanda, Thanksgiving and the holidays are going to be fun around the Haynes family, right? Because there were a lot of family members that were shareholders in that bank, and that makes it. You've got the depositors, right? They're going to be made whole because of the FDIC. But if you were a shareholder in the bank, that was a different story.
Exactly. I feel like that's where the tragedy of the story lies, and also that tension because the shareholders all know each other, they're neighbors, they've known each other for a long time. And a lot of them, this was just something I picked up while I was in town, was a lot of them are ones that are not named in the Fed document. They, my reporting indicates that a lot of them might be older women who are retirees, maybe widowers. And it's just tragic because imagine if you put your 401k or, you put that in this bank stock and you trusted what you were investing in because the people involved. And I think that's where this story is just very, very sad. And
goes back to the importance of what, Joel, you were talking about this, you have these small banks in these small areas of the country, and they're really important.
Just know, if I come to you and I'm like, hey, I need $12 million for a week, I'll get you $1 million. I'm good for it. Just say no.
Joel, if I had $12 million to give you, no offense, but I wouldn't be hanging out with you guys right now.
Ouch. Amazing story. We hope the phone starts ringing off the hook. Amanda Albright, Wealth Team reporter for Bloomberg News, and Joel Weber, thank you.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.